Before I jump into this really passionate episode, and I hope I don't sound like when you listen to this that I got too worked up, but I'm pretty passionate. But a quick holiday announcement for those of you out there, and I'm not going to tell you what the limitation is. I'm just going to say you should act right now. For those of you that have been wanting to purchase my flagship product, those new people that have not yet made the purchase, you want to email me right now. Michael@covel.com. That's my first name at my last name.com. I'm here to make your holiday happy, but you better email me now because the offer is limited. Everyone can't be a winner. There will be losers. Imagine that. Well, guess what? Most people aren't imagining that. Because right now it looks like a gold rush, a digital gold rush. There were some kind of digital kitties they were selling the other day, literally digital artwork that people were selling back and forth between each other for $100,000 each. This is an awesome, awesome move. Everything that goes into a trend, every last piece of not caring, jumping in, I will get rich. This is going to change the world. Let's go. I'm on board. Not only is the taxi driver talking about it, the bikini models on Instagram are talking about it. Everybody wants a piece of Bitcoin. Because right now, that trend says, at a gut level feel to everyone, you're all going to get rich. Every last one of you will make a fortune in Bitcoin. This will change your life. The entire world is about to get bloody stinking rich off digital currencies. Everyone that plays, everyone that sits down, you can be a winner. That's pretty amazing that in this day and age, that message has resonated so fast, so quickly. This is just the start of what happens when billions of people are connected to ideas that they believe in instantly. Now, let me take a sidetrack for a moment. As an entrepreneur, and you're not really being an entrepreneur by buying Bitcoin, but if you are trading Bitcoin, that's just fantastic. But this idea, this interconnected world where people are willing to jump on board immediately to either a good idea or a bad idea. The game has changed. It's an intellectual landscape now. And the players that are offering products, features, services in the future, they'll get smarter. The audiences will get smarter. You will have to do more than just offer another cryptocurrency. You'll have to do more than just being the 27th cryptocurrency to be launched this year. I have no idea how many have been launched. And look, I'm not beating up Bitcoin. I've got a tiny little bit. And I wish like hell I had a lot more. Don't we all? That's the nature of these types of moves. This one has happened so fast. So much gusto behind it. It's not Bitcoin right now that's changing across the planet. It's people. And the real lesson here is the interconnectedness of all of us. And if you've got something, you can literally go from zero to billionaire overnight. Man, that's just awesome. That is so cool. With that little setup out of the way, not that I'm running away from that setup, but with that setup out of the way, let me posit a question to you, the audience. You trade a trading strategy that you've researched and tested like crazy, but you lose 5% after the first year. What conclusion do you draw? You've done the homework. I don't care if this is a trend following approach, a Warren Buffett approach. It can be any approach. And let's just assume for argument's sake that there was no 50% drop during the year that brought you back to only minus 5%. Either you were flat the whole year or you lost 5% in 1 month, or each month was a tiny little bit and it added up to 5%. At the end of year one, you lost 5%. That's my question to you. How do you feel about that question? Now, we just talked about the Bitcoin excitement, where no one seems to care about anything except getting rich. And Bitcoin has had some serious volatility already. So people are losing and making money on a massive scale. It's not just wins. Plenty of people have been bit already. So back to my question. 5%. You lose 5% in a year. So to my question, I ask, you trade a trading strategy that you have researched and tested like crazy, but you lose minus 5% after the first year. Conclusion you draw. My very first response from this nice guy sets the tone for a very long thread. His response, something is not working. My current situation. I immediately responded, tough love is coming at you like a bag of bricks to your gut. Minus 5%? Something's not working? Minus 5%? Minus 5% over 1 year. People are out there swinging at Bitcoin like no tomorrow. And minus 5% says to you that something is wrong. No, minus 5% doesn't tell you anything. Absolutely nothing. Somebody else came back with a response, a little more detailed, a little more academic. Assuming no mistakes on your part and proper position sizing, part of the backtesting should have included a Monte Carlo analysis. If the minus 5% return is within 2 standard deviations of the mean return, the system is acting as expected. Continue to trade. Again, my question is minus 5%. Keep that in mind. Minus 5%. Someone else came in. They said, Michael, obviously we stick to the strategy if we have backtested it thoroughly and done walk-forward analysis. If minus 5% is higher than any historical peak to drawdown, then obviously we may have to re-strategize. Minus 5%. That's what we're talking here. We're not talking minus 20%. We're not talking minus 50%. Minus 5% after 1 year. Now, some people came back and they said there are trading strategies that allow you to never lose more than 5% in a year. Now, think about that. Isn't that the guarantee that we all want? That's the guarantee that Bernard Madoff sold. That's the guarantee that long-term capital management sold. Why doesn't everyone right now, just for shits and giggles, go tweet Nassim Taleb and ask him about trading strategies that guarantee no loss greater than 5% in a year? He's probably got a more direct, educated, intellectual response than I do. Again, we're talking about minus 5%. Somebody else came back and said, hey, if it's in the boundaries of my backtest, then it's just a number. But there's no backtest that's going to show no minus 5%. Any backtest that doesn't prevent, and I'm talking any strategy. Okay, let's exclude Toby Crable. Let's exclude Jim Simons. Let's exclude the high frequency trading of JP Morgan. That's not you. Let's take those guys off the plate for a second. Let's take them out of the discussion. Where are these strategies? Where are these track records that show maximum minus 5%? One of those great thinkers out there, someone who has been on this podcast, jumped into the conversation, Tom Basso. He responded, taking losses along the way is part of trading. Someone once told me that trying to always profit without losses along the way is like trying to always breathe air in and never breathing out. It doesn't work that way. I have a sneaky suspicion the root of that piece of wisdom might have been Ed Seykota. It sounds a lot like Ed Seykota. Someone else came in and said, I would ask myself, did I honor my stops? If so, were my stops too lenient? Go and back test this year with a tighter stop and see where you would be. Or market conditions were just not right for that type of strategy. We're talking minus 5% here. How in the world is the entire planet willing to jump onto Bitcoin, which is not devoid of volatility, and ride that bucking bronco? But if you pose the question, how do you feel at the end of a year if you've lost 5%? It seems like in my little survey of some pretty bright people, literally 5% is not on the table. They've not even imagined it. Or they've thought to themselves, there's a trading strategy out there that prevents a minus 5%. Somebody else jumped in and said, before the stop question, I would ask the winning rate. If a winning rate is, for example, 60% and you're still red, then yes, check your stop loss and risk, because even if you're winning more than losing, maybe those losses are bigger than your wins. On the other hand, if your winning rate is 40%, then it's not about your stop. You have to check your strategy. I don't know what that has to do with anything. 5% is like the wind blowing. It's going to happen. You can't stop it. Rain comes, rain goes. Minus 5% happens, plus 5% happens. Minus 5% happens. Again, this is normal. I don't care what your strategy is. Somebody else jumped in and said, minus 5% in any year would be a major disappointment for me. That's like literally to not look at any track record of the last 50 years, to not study any individual trading histories at all, to literally be completely ignorant of the past. Now, the past, of course, is no predictor of the future. But if you can't find, and guess what, that hard sack of bricks to your gut with some examples, just pause for a second. I'm going to throw those out there. Now, the guy that said minus 5% for any year would be a major disappointment, I just said flat out, that's irrational. Now, he came back and he said, when would you give up your strategy? Not after 5%. Not after minus 5% am I stopping the strategy. But he avoided the most important question that I was posing. How in the world could this minus 5% cause one to think something is wrong? Now, my favorite response came in, if the trader loses 5% after a full year of trading, then the strategy is bad and needs to be changed. Wouldn't you love to have that guy managing your money? Wouldn't you love to see that guy's track record? I don't think it exists. But wouldn't you love to have him managing your money? Someone that confident. You lose 5% in a year, the strategy's bad, and you must change. Now, I came back at him and I said, look, there's zero evidence for that statement. He came back at me and he said, you do not need evidence in trading. You need firsthand experience. Any strategy which does not yield a profit in even a month is bad. I don't know if people actually believe this bullshit, or they're trying to sell something, or they're just fucking assholes. Because I guess there are plenty of new people out there that might think, before they've got some experience, that yes, you make money in every month in a trading strategy. Well, you don't. You never will. No one has. And I'm not giving anybody off the hook if they believe something like that. Because if the guy that just said he makes money every month, I assume he's probably selling something and he's probably got people that are following him to buy something. Maybe he has a fund. Maybe he has something else. But I give nobody off the hook if they buy into it. If you believe something like that, kind of makes sense now why to start this episode with Bitcoin. Not because I'm giving you any fundamental projection that Bitcoin's not the real deal and is not going to continue to go to the moon and be the biggest move ever. It very well could. I have no idea. But nor do you. You don't have an idea. The only thing we know about Bitcoin right now is that price is up. The price trend is up. The price action appears to be up. Well, it's more than appears to be up. It is up. No other way to trade that than long. Oh, guess what? You're not going to get out at the top of Bitcoin either. That's not happening. You think you're going to get out the top? You never get out at the top. Nobody gets out the top. Oh, yes, somebody gets out. Someone gets lucky. Luck is in play here. There's always some part of the population that gets a little lucky. But is that skill? Is that luck? Is that strategy? Is that luck? Come on, be honest with yourself. This whole conversation inspired me to reach back into the archives, to go back in time and pull from the wisdom of really wise traders from back in the day, guys like Richard Doncian, Amos Hofstadter, Jesse Livermore, Roy Longstreet, Dixon Watts. I mean, literally going back 100 years. And I called this my 43 kick-ass trading rules for Bitcoin and crypto trading. I'm not going to read all 43, but I want to give you a flavor. Number 1, don't fight the Bitcoin tape. Number 2, like sharp instruments and strong spirits, leverage confers many benefits, but only when used with care. Number 3, limit losses and ride profits, irrespective of all other rules. Next, you can't force Bitcoin into giving you something it doesn't have to give. Next, talk is cheap and Bitcoin rumors are even cheaper. Next, the Bitcoin trend is evident to a man who has an open mind and reasonably clear sight. I love this one. Watch Bitcoin with one objective: to determine the direction of price tendency. Now, this next one's not so bad either. Bitcoin prices, like everything else, move along the line of least resistance. Oh, this one's great. Don't be too curious about the reasons behind Bitcoin moves. The smarter you are, the longer it takes. And of course, the classic one, and I'll end it here and let you go dig in for more. There's only one side to the Bitcoin market, and that is not the bull side or the bear side, but the right side. Now, of course, for all of those maxims, those great pieces of Wall Street lore, I just inserted Bitcoin into the word market or stock market or whatever. And it fits perfectly. You see, all this wisdom that goes back decades, even a century, it's all timeless. Because what are we trading? We are trading human behavior. Are we really trading Bitcoin? No, we're not really trading Bitcoin. There's no way to know the fundamental value of Bitcoin. We're trading human behavior. We're trading the actions of people. That's it. Every trend, that's all we're doing. That's why trend following works. That's why you can be an expert in cocoa, gold, platinum, coffee, whatever stock index. You can be an expert because you don't have to be an expert. You just have to follow the human behavior. You just have to trade the human behavior. Now, I promised you in the middle of this conversation I would add some meat to the bones because I really beat down the minus 5%. I was so happy this year to put in my newest edition of Trend Following a quotation from Warren Buffett and a piece of performance data from his partner, Charlie Munger. Buffett is quite clear. If you can't afford to lose 50% of your account, maybe only on paper, which is still real money, then you should not be in the market. 50% you should not be in the market. So the guy that's the multi-billionaire, the most successful investor ever, if I walked into his office right now and I said the minus 5% thing, I mean, maybe he would give me, maybe he'd laugh at me. Maybe he'd be nice enough to laugh at me and cut a joke. Maybe he would just look at me and say, please go away. Because he would know that I was so lazy, so stupid, that I did not bother to do my homework. I did not bother to find out who came before me. See, the minus 5% is not about your little gut level feel and how you happen to imagine your money. That's a bunch of nonsense. The market's much bigger than you. You're just one little bit piece. That's it. So Buffett says, if you can't lose 50%, 10 times my little minus 5% example, you should not be in the market. Bill Dunn, for 40 years. Now, this is delivering an after-fee track record of nearly 18% a year for 40 years. Bill Dunn has regularly taken 20% dips in a month. He too, like Buffett, because Buffett took the minus 50% hits, no doubt about it. Buffett has taken his share of 50% drawdowns, and so has Bill Dunn. So why have some of the most successful investors, traders, different strategies, why do they take these hits? And if I do one little survey question of minus 5%, people puke out. Kind of funny, and I hope I don't sound too intense today, but I'm just amazed at how ignorant people are, or how emotional they are, in the sense that the emotion literally blocks out any lessons they've learned or any ability to reason and think in the moment of right now. Let me give a great exercise, something tangible that you can take out of this podcast episode. Go find track records. Don't listen to a word that I say except this, because I could be wrong, right? I could be completely full of it. I could be as full of it as the people that I'm making fun of. So you, being the scientist out there, you being the skeptic out there, you have to say, okay, the people that Covel is making fun of, they're full of shit. Covel's full of shit. So what do? Here's what you do. You go find the track records. If you need to go to the Commodity Futures Trading Commission, you go there. You ask for disclosure documents. You look for the disclosure documents of every trend following trader you can find. You go look at the month by month of Warren Buffett. You go find track records of George Soros. This is your assignment. Then, once you've done all that homework, then ask yourself that question again about minus 5%, right? I mean, I've done this, so I know what the exercise yields. But I can't give you the same confidence that I have. You need to look at the track records too. Because one day, if you get a chance to meet a Warren Buffett or the next Warren Buffett, I don't want you walking into the room and being so overprotective and so childish over a 5% loss that you literally look like a complete fool talking to a great investor or a great trader. Because that stuff is just crazy. If you're worried about 5%, go buy a CD. Go to your local yokel bank and get a savings account or something. Do they even have savings accounts anymore? But if you're this paranoid, then get the hell out of Bitcoin, get the hell out of the market, and just stop, because this isn't for you. A closing thought, unrelated to this entire conversation today, but it works well with a song that I want to go out on. Please, please, please do not pitch me any more weed entrepreneurs. I've come close to having maybe one or two on this podcast, but I've just thought about it. I don't care about weed. I don't smoke it. I have no interest in talking about it. I mean, I think it's fantastic. There's probably been many, many millionaires that have just kicked royal ass in the weed market. And that's fantastic. And someone else will have you on their podcast, but not me. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash, or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take, along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.